In this video, I'm going to talk about what is a setup 2. Alina asked a question, is this a setup 2? And I'm going to explain it if it is or not.
So I think it's 11:32.
11:32, that's price
So
going down.
Yeah, so that little bit there, is that forming a setup 2, or is it not because the alligator's still crossing above it?
Okay, so your question is, and you're talking about a setup 2 short?
Yes.
Absolutely not. That's the incorrect interpretation of a setup 2 that Doug brought into the world the other day. Yeah. And
I'm going to go back and watch the video from the other day so you don't have to repeat it all.
Partially that's true, but I can still talk about it. This is the situation where, like up to this point, you are potentially looking for longs, right? Because you're considering this as a 3 and this is a 4. But as we can see, the first continuation was around here. And around this point, I actually tried it. I think Sam was with me as well. I went long here. Then I went long above this level. And then it was rejected there, right? So I know you're talking about this, but I have to explain from there. It will make sense. And as it comes here, hits it, that's our first rejection of this level. I won't be interested in taking this breakout anymore, because here now I want the market to prove to me that it has broken this. And when it breaks it and it pulls back to it or it continues, I now trade. So I'm on pause there. And then the market, the gator sleeps, AO crosses the 0 line. Now I am in the territory of, okay, we have a 3 and a 4. Should I be taking a setup 1 long? Obviously, this was an Apple signal, you know, a reversal signal between gator and purple. So I could have gone long here, but the reason I didn't take that is a different reason, because Apple trading is different. So let's not explain that right now. But anyway, if this is your setup 1, you're considering that, the reason I am not long or you won't be long is because when you arrived at this point, you already have that information about these levels, which you saw getting created. That price came to it, did not break it, tried it again twice. So that means there is support resistance there quite heavily. The same thing to do would be, you want it to break that level and then we'll deal with it. It comes here, hits that level again and pulls back. So now you'll know why I'm explaining this. This over here, if price started going up and gator was open and this box level was suppose up here, this can create a setup 2 for me. But at that point, obviously this was my setup 1. So let's consider that as my setup 1, which it was. So we have a green dot, and this is Mr. Bezadi, your question of the green dot, which I'm sure you understand now. It breaks the reason it's green dot is obviously because, one, it's a dot because it's closed above gator. Second, it's green because it's broken the box high, and that's because we don't want to take market orders, we want to have pending orders. So because the level to the left is closed, I had two options: either to wait for a fresh box, which happened here, but by the time the box happened, look at this, price had actually closed below the box, so that's a different issue. But anyway, assuming if price was somewhere here, if this red candle was here, right, and this was created, this was my setup 2. So coming back to your question, Alina, there are two ways of looking at setup 2. One is a setup 2 defined by Grant based on the color of the dot. So from the flow chart point of view, every green dot and pink dot would be a setup 2. Why? Because For a green dot, you'll have to wait for a fresh box to be created, which in this case was created. And the reason is that when we applied this rule, it saved us a lot of rents. So even here, if we went market order and we did not consider all of that, we would have paid the rent. But had we waited for a fresh box, we saved paying the rent. So the question whether it is a setup to the downside is completely out. Why? Because the main idea is that we want to trade into wave 5. If you want to trade inside a wave 3, and you have a confirmation that this is most probably is a wave 3, then you can trade setup 2s, which would be this over here. So let's suppose you know that, well, not suppose, you actually saw this. At London open, price went down, volatility changed. You can see very strong green candles, goes up, pulls back, Gator is now open. You have a box level, but purple is not really pretty over here. Purple will be here around that time. I think 21, yeah. Purple will be here, so everything will be correct. You could go long here. So this would be your setup 2 without the dot. So over here, you can say that that's true. But because purple is not correct, I still wouldn't bother with setup 2, but obviously, you know, I'll be looking at other things. On this point here then, when price closes below the green line and then goes above, so now here you have a blue dot with an open Gator and a peaking AO. This box break up there, but obviously the box was a little bit big. It was all right, but you know, for today's volatility, it was, pip-wise it was okay, but today's volatility-wise, it was big. But if you took this trade and called it a setup 2, it's perfectly fine. We can accept that. This blue dot over here can be considered as a setup 2 as well, because Gator was open, box was tight. You can go long here. This would not be a setup 2 because now Gator is sleeping. This would be a setup. This is actually an intersection between a setup 1 and setup 2. The dot makes it a setup 2 because it's green, but actually because the Gator was sleeping, it's actually a setup 1. So setup 2 is not about the intersection of purple and Gator. That was, I don't know where he got that from. Yeah, but he just loves it. Now he's trading this every time he sees it. So that's Doug. Well, you know.
So that's the new Doug method. It's going to be coming out soon.
Well, I'm not trading every time.
Thank you.
So from yesterday's chart, this is a setup 2. Setup 2s are, there are 2 types of setup 2s then, actually 3 types. So one is the green dot that makes it a setup 2, which is an intersection between setup 1 and setup 2. Some of those green dots setup 2 would still look like a setup 1. But the one that I'm talking about, which is a higher probability setup 2, is basically what we saw like here, and the one that I explained in the video yesterday, where whenever you look at that setup 2, it's actually very similar to Hunt methodology, that on a lower time frame, that would become a setup 1. So you want the Gator open, you want the trend confirmed, and all that to be in your favor. If you go for the intersection of purple type of thing, like these ones, or like this, or if you call this a setup 2, this is basically reversal. This is what we called, we used to call this the black dot trade.
Could you put your cursor back where you're talking? Because I can't see it. Right, thank you.
Yeah. So this would be a black dot trade because when it happens, price is going against the purple. So for this, you'll have to wait for a box to be created, and you can only trade it when your entry becomes below the purple, and not the shifted side of it, but the current. So if when this line was here, the purple, its line would actually have been somewhere there. So from the technical point of view, green was below the red, red was below the blue, blue was below the purple, and your entry over here was also below the box and the purple. So technically a blue dot trade, but not a setup 2 from that point of view. And at the same time, you can still say, yeah, it is a setup 2, because one of the main thing about setup 2 is open gator and second box. So any box break with an open gator can actually be a setup 2. So anywhere like here, this long can be a setup 2. So from that point of view, every box break with an open gator is a setup 2. And if you accept that, then you're in a lot of trouble, because then you have to trade quite a lot of setups. Like this would be a setup 2, you know, worth taking and all that. But we still want to be in line with the wave. We want to trade the setup pattern, right? Let's go to the 15-second chart. We didn't get anything here, so I think this was the setup. Earlier, started here, took this setup, went up, came back, I think took a few pippets out of this, then kicks us out, and we went long here. So this is the type of setup one I'm talking about. Can you see this one? So you have the blue dot, you have the gator open, you have the formation of the wave in your favor, you have a 3, 4, 5 going on, and then your entry is an entry where there's nothing to the left, and that's the setup 2 we're after. Over here, this was also a setup 2, but also you know that AO is peaking. It's far away up there, so you don't know. So my favorite setup 2 is basically shortly after a setup 1, and that's where I will finish this conversation, where I would say, okay, what is the setup 2 that you take? Well, I will take a setup 2, but not unless there was a setup 1 before it. So I want a setup 1, and for some reason either I have not taken it, or the level to the left was closed or something, or there was some reason that I didn't take the setup 1. That's why now I'm taking setup 2, because I waited for price to show itself and the gator to open.
Yeah.
There we go. I'm going to change the screen now.
Thank you for that clarification.
You're welcome. Thank you for the question. I like the questions. Let's change this to that one. Okay. This is a great feature I found in this Discord. It's like, this is fantastic. I can switch from one MT4 to the other. Okay, so now let's go there. So Bitcoin is at the highs again. I think in the last few minutes it's actually moved considerably. This is our setup 1 signal. So on Bitcoin we had 2 signals this year. Just 2 beautiful signals. I took this one from here to there, and I think, oh, there we go. The reason I was coming to this was to actually give you another a great example of setup 2. See, sometimes
I've just got a black screen, is that right?
black screen.
Yeah, I can't see nothing. Can everybody else see the screen?
I refreshed the page and it is
Okay,
broken.
I'll see that, yeah.
Okay.
I can see your Bitcoin chart.
All right, great. So as we can see, this was the class 1 setup 1, right? 21st of July, blue dot. Let's take it back. It's one of the most beautiful setup. We have a clean 3 up there, and then a tight box, and immediately we were rewarded. Goes up, creates a sideways. You see over here. So this at that time looked like a wave 5, but I know that, and we all should know that in the longer term, when price actually starts to move, these 5s will keep turning into new 3s, and the 3s will turn into 5. So the wave just continue. So this is what it was around that time on the weekly chart. So let's go back to the daily chart. We have the blue dot, but the purple is inside the box. So it has now gone into the territory of setup 0, right? But still, the purple has not mingled with the gator, so we can still consider it as a semi setup 1. Box is tight, risk is low. You know, if you were to go long at 11,000, you know, just $500 you know, stop loss over here shouldn't be a problem. But if you were too careful, you wanted Bitcoin to show its hand, you would have waited. So when you waited, now you have a setup. Now you have a new box level up there at the end of this candle. And you have the gator open, because gator would have been at that time over here, because this is what you will be seeing. At the end of this candle, your green line would be here, red would be here, and blue would be here. So that's how you would see it, around that level. So gator will be open, and you would go long here, 11,800, and maybe you got out either yesterday or you're still holding it, blah, blah, blah. Obviously, we went long here, and we were out somewhere here. 15,000, I think I remember we got out. I wish I got back in here. As you can see, doji, another doji inside. Very, very tight risk. So if I were to put a line on this and drop to a time frame, we would see something interesting. See, that doji has creating a setup 2. Maybe on an hourly chart, it would have been even better. Of course it was. So the doji, this day was the doji day, and this was that pullback. Let me go back to the daily chart. Can you see this? So this doji is that day, and the smaller inside doji is the other day, the 10th and the 9th. It's going back. So we have a strong 3, the B trap doji, and then the tight doji, and then you have a setup 1 here. So this is one mechanism of trading the longer term. Like if you see a strong trend going on the daily chart, you drop to the hourly, find a setup 1, take a tight stop loss, like here. I think the stop loss here is 15,500, 524, and 3. So let's say 200 or 300. Yeah, 200 is your stop loss. I'll mark this. See, like this, so we can see it on the daily chart. So look at that. Your stop loss was just this much, and when it goes 200 in your favor, so 200 you stop, it goes up there. You sell half, but you leave your stop loss at the original location to allow the trade, the market to breathe. And then you switch the daily and let the chart run on the daily. So this was a way of getting back in with only $200 risk, and now you are about $4,500 in profit on a $200 risk. So risk reward is massive. So for strong moving markets, basically these inside candles are really, really powerful if you manage it that way. Even if you took this inside candle on its own like this, your risk would be just $400. And when it goes 500 or 400 in your favor, around those levels, you close half, leave stop loss at the original, and let it run. That was another way of, I think it's broken the all-time highs, has it? Let's go to the weekly chart. That's the all-time high. There we go, yeah, it's above it. It was broken yesterday, 19,463. Let me just check the high of this. 19,468. Yeah, 19,468. I can set that up by going into its parameters, 4, 6, 8. Okay, now it'll be perfectly sitting there. That's the high. Today it's trading above it, but obviously now we have a new high, which is yesterday's high. That's where massive selling happened. Okay, so we could wait for, on the hourly chart, for this chart to basically go sideways and create a setup 1. Obviously now taking it would be a bit risky because you know, it can turn around. We see a clean 3, but Monday, yesterday, this was like a pretty obvious indication. When it went up, came down. When I was making the video yesterday, I was 2 hours late into this. Had I seen it over here, I should have gone long on this, but then I had a chance to go long on this there, but I didn't. If I did, the obvious target would have been this. And the other way of doing that would be to actually go down to the 15-minute chart. And if you look at the 15-minute chart, and this is the reason I would be talking about this, is because, you know, this 3-candle pullback converts into a beautiful setup 1. Look at this. Clean 3, nice little wave 4, sleeping gator, blue dot. Go long here. Your target is obvious to you because it's these levels, you know, very clear, those levels. That line is there. You take your entry 18,730 and your target clearly 19,422 or, you know, 50 or something. It's a beautiful target. Moving markets would always create beautiful setup 1s. If you can wait for these beautiful setup 1s, aesthetically pleasing setup 1s on any time frame that you trade, your success rate is going to be higher. Anything else? What else are we talking about? Okay. So Hamish went long on this one here, and he's targeting those levels. Now the reason I don't like this setup is because of the impulsiveness of the wave 4 down. So when I see correction this strong, I lose faith in pursuing a wave 5 up. And even now I think this is a 1 down and a 2 up, which I see like a strong impulse wave down and an ABC pullback up. So if I go into further details of that by going to the M15 chart, I'll be able to break it down. So I can already see that I can see an Elliott wave, an impulse 3, 4, 5 down, which will be more visible on the M5 chart. You can see now 3, 4, 5. To get a correct count, you need to be somewhere near 100 candles. So as soon as we got there, we can now get a correct count, 3, 4, 5. This itself is looking like a 3, 4, 5. Most probably this is A, B, and C, or who knows, this could be a 1 on its own. So that's the thing with Elliott wave. So many possibilities. So that's
this position.
Sorry?
I free risk this position. Yes.
Oh yeah. I mean, I understand. I like the idea that you applied, because if you go to the 15-minute chart or the 5-minute chart for that, it's a perfect setup. So right at the Frankfurt Open, I mean, if I was looking at it, I would, in most cases, I would go to the M5 chart, take this trade here, and probably, you know, I'll be out already. But you took it on the hourly chart. That's pretty good. But for me, on the hourly, even though I'm long with you, it's not my favorite setup because of this impulsive correction. This is more perfect for me. This was beautiful. And this was a good chance of a setup too, which I did not avail myself the other day. Otherwise, this would have been a nice 2R. So I missed on this one. Pound dollar has been very spiky this year. The results are kind of like mediocre for pound. Anyway, Swiss is below the box and can continue to go down. Right now it doesn't have a setup. Dollar yen, saw this yesterday already. I don't see it setting up. This move has kind of screwed it a bit. And these look like, you know, the banks doing their stuff. Japanese bank used to do this a lot. They said they're not intervening, but that's what the Swiss banks always used to say until the 2015 when they said, okay, we're not going to do it, and then everything crashed. Obviously state banks do this. That's the problem with Forex. The biggest problem with Forex is that there is no exchange. The guys who buy and sell from you have the market. The banks have the market. They have created it. So they have a lot of power to kind of change things, but not enough power to feed the conspiracy theorists as if, like, you know, they just are totally in control of it. That's not true, but yeah, a lot of it is algorithmic. A lot of it is exchanges, which has nothing to do with trading. And that's another thing with Forex. So, for example, if you compare a Forex pair to a stock, nobody exchanges money for a stock. Well, not all the time, just because they needed the stock, right? They're like, oh, could you exchange my dollars into Apple stock because I want to buy something with the Apple stock? That's not going to happen. But it is a frequent thing to exchange pounds for euros because they need euros to be invested somewhere. Or somebody is exchanging a few billion euros into pounds because they're bringing into Britain and they're going to invest that money in Britain. They're not necessarily doing that because they are trading the currency. No, they are just exchanging it. And that's where, you know, the patterns of Forex market kind of break at times because there's that randomness of it. But then at the same time, while that transaction is happening, if it is big enough to move the market, inside it, there will be patterns that are exactly the same. You know, the setup one pattern, the Elliott wave pattern will continue over and over. And that's why I always say the best times to trade are when volatility is high and the market is moving, because when that happens, you will find Elliott wave everywhere on all the different time frames. So it's our job to only trade when the market is moving. Bought now. So if it opens not over here, but anywhere somewhere here, it should be bought. I mean, it should have been bought yesterday at this level. ABC has happened. Wave 3 is extended, so that's the problem. It could continue to go sideways. But that's not a huge reason to not trade in it. I think this was a better spot to trade, obviously. Look at another one. This was good. UPS. Okay. Delivery companies are making money. Their stocks are going up. I think in DAX, there's one of the biggest companies, Delivery Heroes, and they're doing well as well. Let me just show you that. D. Yeah, they were going up even before the pandemic. and they continue to go up. Many of the DAX stocks on its own created their own nice patterns. If you look at this one, this is that perfect pull back to the purple and then continuation of wave 5 up. I need to keep some water with me. Drink some water. Yes. So BMW is creating a pullback pattern. Now, because there's a gap in data on the stocks, when you switch from time frame to time frame, the relationship is different. So the daily chart is related more to hourly chart on this, because there are missing candles in there. It's not 24 hours market. Yeah, it's creating a wave 4 on this. Go to the other list, that one. Setup. It's a nice setup one.
Amy, can you
Started from here.
say that again?
Yeah.
About the time frame?
Oh, so on like in Forex,
The
the
24
time conversion when you do that. So in Forex, a daily chart, you know that the two time frame connection that we have, M1 and M5, M5 and M30 or something like this.
Yeah, understand.
So on a Forex daily chart, if there's a pullback, you'll have a setup on the 4-hour chart. It works well. It's a factor of 6 in there, right? So a factor of 4, 5, and 6 is fine. But when you try to apply that to stocks, it doesn't work. That's because the factor of 5 is not enough, because you don't have 24 candles. Not 24. You don't have enough candles. So when you break down, let me just bring a Forex chart. Let's say we look at this chart. Bring something nice. I want to find a stock that has a clear pullback pattern. Okay, let's talk about this one. So let's suppose we have these 3 candles that are pulling back.
Yep.
So if we go to the, actually not this, let me just find a good chart where I have a nice example. Maybe this is a good example. Yeah, 2 candles. Let me just go and change this to 4-hour. Is it this one? Okay. Yeah, it kind of does the job. Let's change these lines. Session breaks. Right. So as we can see, a 2 candle pullback, or a 2 or 3 candle pullback, has created a nice kind of a setup one on the 4-hour chart, right? And that's because these 3 candles will be multiplied by 24, right? So kind of like 75 candles of pullback if you go to the hourly chart.
Yeah.
So if I went to the hourly chart, my wave 4 will have too many candles. But the factor of 6, a 4-hour chart, has created a nice pullback and, you know, brought AO back to the 0 line and created a nice wave 4 for me. If I were to apply this to a stock chart and I go down to a 4-hour chart, I will only have 2 candles because stocks usually have 7 to 8 hours.
Yeah. Okay.
I won't have 6 candles for each daily candle.
Yeah.
So for that reason, if I go to the hourly chart, I will probably have the correct number. So if I go to now a stock chart, let's go to Tesla, I think. No, where's Uber? Where is Uber? Yeah, Uber, because it has a nice pullback. 1, 2, 3, 4. Let me put a line there. So we have 4 candle pullback, but the 4-hour chart is not showing a setup 1 for me. And that's because there's a lack of information in there. The candles are limited. So if I go to the hourly chart, now I have a setup 1. So the connection between the charts on the stocks, because of the lack of hours, is a daily chart pullback would create a setup 1 on the hourly chart. And again, if you click on this button, which is the extended hours, and switch off the extended hours, then it changes again. For me, that works better. It's a cleaner chart, and you have a nice clean setup 1. So a pullback on the daily is a setup 1 on the hourly.
So you're
In
only,
FX, a pullback, yeah.
so you're only looking at day trading hours.
Yes.
Yeah. And then during the day's open market trading.
Yeah. Well, that's one way of looking at it.
Yeah.
But with Forex, because the charts are 24 hours,
Yeah.
a daily chart will not create a pullback of a daily chart will not create a setup 1 on the hourly. It actually will create a setup 1 on the 4-hour chart.
Yeah. Okay. That makes sense.
So that's a different way of looking at it. Yeah.
Cool. Thank you.
And that's why if you are used to Forex and then you start listening to people from stocks, they would see something on the daily and then they will go to a M5 chart, a 5-minute chart or a 10-minute chart. I used to find that very odd when I wasn't used to this. I used to think, why are they going from a daily chart all the way to the M5 chart? Because that's too far. But as it turns out, as you can see, I'm showing you this example. I have the daily chart marked here, and I'm on the 10-minute chart.
Yeah.
I can still see the pattern. If I go to the 15-minute chart, this is pretty relevant and pretty good setup for me. So you have the intraday and the daily chart and intraday connection is quite good on stocks.
Okay.
So you can mark a level and then drop to the 5-minute or 10-minute chart, and using the same levels you can find setups. I think in this occasion, the M30 has created the best setup 1 for this, based on this breakout. So you have a breakout here on Uber. It's cleared all those levels. And suppose you missed. Basically, the point that I'm trying to reinforce is that on an open chart in stocks, when gators open like this and you see a nice clean pullback and then a confirmation, pullback with a confirmation. You see this is a confirmation candle because it's bullish.
Yeah.
You can then pursue that and go long, knowing that this is really a fractal geometrically correct setup. This literally would be like taking a trade on the 15-minute chart or the 30-minute chart. So we have taken this at 47, sold it at 49, and a 48 based on this pullback. It's a great setup. Tesla, obviously, buying from all the way here. Tesla had beautiful setups. Again, because when a chart is moving, you will have setup ones after setup ones after setup ones. You have setup one here, setup one here, setup one here. So this would be difficult to hold, but ideally for setup one, if you go long here, you need to have your stop loss here. Yeah, that's what it is. If you got out here, you'll get back there. It opened high. I think the other one was mRNA. It's a very nice setup with news the other day. So this was the vaccine news. Jumped high. All you had to do was just take a trade. Take a trade and let it be. But if you didn't, then we had the most perfect, beautiful pullback. I should have come to this one earlier, actually. So you have a 3-candle pullback. Gator open. Levels to the left cleared. Let's put a level here. You know now that anything above this, and can you see this? Even when you were long, the next day it came and retested those same levels and started going. So if I show that to you on the hourly chart, it would look like so. Let's get rid of the extended hours. So without the extended hours, those pullbacks are perfect. Let me just bring the session breaks. As you can see, this is a 19th of November. At the open, you would buy it. Your stop loss would be here. Just let it run. Comes back to it on that, I think on the 24th of November. At the open, it retests that level, and then it goes. And then after that, it hasn't looked back. I think the power of the setup that we have, it's so amazing. If you understand this pattern and the kind of advantage that it gives you in the market, it is very, very powerful if you use it on stocks like this. Even these pullbacks is just fantastic. Just find yourself charts that are moving strongly with nothing to the left and has news as a catalyst as well, and wait for a pullback. Trade it on the 15-minute chart, trade it on the hourly chart, or just simply trade the daily pullback. Entry here, stop loss here, let it run. This is huge. This is huge. 95. Imagine if you took a 95. I mean, this is big. I mean, it's buying it is not easy. But if you can't buy 1,000, you can buy 100 stock. Small account, $10,000. Buy 100 stock. This one worked. Let's say you bought 100 stock, 9,500 less commission. You sold it at the close yesterday. That's 50% growth. 50%. Come on. How often does that happen on in a Forex chart? With Forex, I think to make 50%, you'll have to risk 25% or 10%. It's hardly ever going to happen that in a 3 or 4 days move, you could make 50%, unless you risk 10%, and then, it goes 1:5 trade. I mean, not on a daily chart. So there you go. Anyway, that's today's stream. We didn't talk about DAX, but then we talked about it anyway, so that's what it is. If anyone has any other question, I can talk about it. Otherwise, it's a bye-bye time.
Oh, thank
That's
you.
brilliant. Thanks very much.
Thank you very much for listening to me and joining me here. I hope to see you tomorrow. Now I figured it out. I'm going to stream charts. Yeah, I'm going to run the chart. Well, you guys have the same charts anyway, but I'll run the stream from the London Open at certain days, so I can then point to those, section of charts that I'm talking about. Okay, lovely to have you. See you tomorrow. Have a good one. Bye bye.
Bye.
See you, mate. Bye.